Hello and welcome to this week's Market Outlook webinar. My name is David Jones and I do these every Wednesday in association with Aondo Markets. This is the last one of the year, just before Christmas. If you're watching the recorded version, it was held live on Wednesday, the 21st of December at 12:30 in the afternoon. So they normally happen every Wednesday and they resume in the new year every Wednesday. And it's quite simple. It's a look back at what's been going on over the last week and a look ahead to the next few days to see maybe where the opportunities could be. And it's a mix of different markets, a bit of FX, a bit of indices, and of course commodities, gold and oil. So we try and have a look at everything and have it all done within half an hour. It's been, I mean, since last week, when we did this webinar last Wednesday, it was the US Federal Reserve interest rate decision later on that day. And as expected, they raised rates, interest rates by 0.25%. It wasn't really a surprise, but I think there was a suggestion and a big hint that we could well see 3 rate rises next year, and that was the surprise to market. So we have seen in FX, in currencies that are quoted against the dollar, we have seen some big moves and some big levels broken. So let's start off by looking at that. So I'm going to flip over. I'm going to flip over to, which screen is it? That screen, there we go. So what I'm using is Aondo's Trade Hub trading platform. So Aondo, very big in social trading, but they also have a trading platform where you can do normal spread betting and CFDs. You don't have to follow people, you can do your own trading. So what I'm using is their Trade Hub platform. And this is, this is an old favorite chart. This is one I've been banging on about. We've been looking at every week, and I didn't think this was going to happen. But this is euro dollar. Let's just take a step back and look at the move from last week. So a week ago, what was that? A week ago, the 14th, wasn't it? So euro dollar would be about here, trading around about 106, and you can see the effects that this surprise sort of forecast that we could see more rate rises next year for the dollar. See the effect it had on the euro. It's pushed the euro a couple of 100 points lower, even more than that yesterday. So traditionally a higher interest rate environment is good for the currency that's going to see higher interest rates, because looking at it simplistically, you get a better return in dollars than you do in euros. So we saw pressure on euro dollar, euro weakness, dollar strength, and it broke this level, this massive level that I've been talking about probably all year. For much of last year, after this massive decline in euro dollar, we saw this big basing pattern, what I thought was a basing pattern, but in the last week it's broken to fresh multi-year lows, euro dollar. So it's really interesting. I think it's clearly it's an odd time of year now over the next week or so, but when we come back in January, is this then the start of a sustained move lower for the euro, for the dollar, maybe back to parity first of all, where 1 euro equals $1, which again I never thought we'd see, or is it just a false break? So I think euro dollar is really one that we'll be keeping a close eye on in January, in early next year, because this was major support that had formed in March 2015, November 2015. We'd come back to it earlier, last month, bounced off it, but this move by the US has sent it lower. So it'll be interesting to see. There's our longer term picture of euro dollar. You can see, what an important level, well, sort of semi-important level it was way back in 2003. And if we did see a sustained break, there's actually quite a bit of fresh air to the next major support level, which is below parity with the US dollar. So I think the euro US dollar argument is going to be an interesting one next year. But I was not expecting that. I wasn't expecting that to happen. So let's see. I think on the hourlies, I don't know if there are opportunities on the hourlies. I mean, personally, I'm not doing any more trading now for the rest of the year because it's it's an odd time. It's quiet. We've got Christmas in a few days, so I'm just going to wait and see where we are the beginning of January. But that's the euro dollar on the hourly charts. So we're seeing, I suppose, a little bit of support over the last 5 days or so at 103.60, maybe for a push back up to 104.80, 105. But my view is, why take the risk this time of year when the trade is going to be really thin? Now, the one from last week, if we have a look at this one quickly, which I said this is really a textbook chart. This is the really interesting chart to watch, and it did end up being interesting, but it moved a little bit too quickly. It was dollar Canada. I think we were looking at this last week, and I was saying how so this is the dollar Canadian dollar. how it looked like there could well be um, a buying opportunity coming up in a dollar, Canadian dollar, because of this wonderful trend that's been in place for much of this year. But what happened? This was the move on Wednesday. We'd have been looking at it here when it was coming back to the trend line, but with that interest rate move on Wednesday night and expectations for next year, we did see the trend continue, but it jumped so quickly. It rallied. What did it rally? Something like 200 points pretty quickly after the decision, the dollar, Canadian dollar, and it's continued to push higher. So it's performed in a perfectly textbook way, just a little bit too quick for me to do anything about it. But I think again, dollar, if we did see maybe a bit of a dollar pullback, US dollar pullback in the days and the weeks ahead, that if it starts trading below 132, it looks like a good buy with 130 still the big level. So I thought I'd just have a look at that one quickly because I remember being particularly impressed by that chart next week, and it's played out last week. It's played out well. It's just moved a bit too quickly. Pound against the dollar, similar. So it's just a bit messed up at the moment. I think I said going into last week, I had a trade on. I was long pound against the dollar, and if it could just push up in the afternoon, I could move my stop to break even and blah 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 blah. I did, but ended up getting stopped out at break even. So the market moved. It was the 14th, wasn't it here? So the market moved 127.25. I think was where it moved to. I'd bought at, I don't know, 126.40 or something, and it just went bang, stopped me out for break even. What I should have done probably was reversed it, because there were such big levels in place, particularly at that 125.50. On a break of 125.50, going short in hindsight would have been a good move. But since then the pound has remained under pressure. We're a good 300 points lower than where we were a week ago. But again, I don't think there's any hurry to do anything. If you go back to the dailies, on the daily charts, we've still got support coming in ahead of 123 on pound against the dollar from mid-November. So if I was a betting man, my money would be on us, seeing maybe 127 again in January. So for me, my bias at the moment, while this 123 level continues to hold, would still be probably to look to be a buyer of pound against the dollar. But not at the moment really, because only yesterday it made a fresh low for this move down. But I do think that would be my bias, I think, in January, because we are still seeing it reasonably well supported. And you could argue, even though the trend line's broken, we do have something of higher highs and higher lows still, while 123 holds. So so for me, the coin flip for January is for a push higher on pound against the dollar. Oh, someone's mentioned the Aussie dollar. That's an interesting one as well. So we had these Aussie dollar and New Zealand dollar. We have had these good recovery trends in place, and I don't know if they've been destroyed by what happened over the last week. Let's take a look at the Aussie dollar, US dollar, just to remind ourselves, if you haven't watched the whole box set of webinars since June. The story in recent years, because the Aussie dollar, is a commodity-driven currency or a commodity-driven economy, we've seen plenty of Australian dollar weakness, and then we'd had this big slide that started off in April 2013. But earlier this year, there was an argument that maybe we were seeing a reversal in this slide. Let's plonk our trend line on. So I do think this is an interesting one. Aussie dollar, US dollar. I think I've drawn this line a few times, and it was one of these, well, is it or isn't it sort of moments, where it broke into new lows, but it reversed and looked like it was trying to crack the trend line, but it really couldn't get much traction through 78.50. But it was definitely building the argument, like with dollar yen, when we were watching it all summer, dollar yen, thinking, well, okay, is this actually looking like it's going to reverse? So the Aussie dollar, US dollar was maybe making the argument that we could be seeing the beginning of a trend reversal. Since then, we've broken that short-term support on Aussie dollar, US dollar, around about 74, but I still think this is the big one to watch. Those May lows, which is about, 71.45. So we're currently 72.67, so we're 120 points above those highs. So this is another one, I think, for January. Like I say, I won't do anything the next couple of weeks. But I think for January, another one is going to be, right, how does the Aussie dollar perform if it slips back to these levels? So for me, I think there are. You could argue both cases here. If you were committed to the downtrend, you could say, well, look, that downtrend is still in place. It's moved higher, but it didn't, even though it's poked out the downtrend line, it's not taken out those April highs. And if you wanted to make the case for recovery, you could say, okay, but we've broken through these highs, Okay, we've come off a bit, but we're still holding above 71.40. So I think the 71.40 level is the big one. So when we'll come back to this, I'm sure there's a webinar the first week of Jan on that Wednesday. So we'll catch up with all of this and start thinking a bit more about potential trades here. But I think I'd still be inclined to be a buyer of Aussie dollar, assuming that level holds. And a quick look at New Zealand dollar. Someone's asked for oil. We're going to come to oil. We'll come to oil when we flip through stock markets. I think New Zealand dollar, US dollar is pretty much the same. Yeah, it's arguably breaking down more. You know, the story for the New Zealand dollar this year has been one of recovery. We had this trend in place from September, October last year, with the market sort of moving higher. And I suppose you could argue that the break that we're seeing has broken some big supports, you know, following the Fed. I mean, that really is quite the decline. 72.40, we've come off 300 points at that great uptrend chugging along. We've come off 300 points since then. So it looks maybe a bit more bearish than the Aussie dollar, US dollar. We're breaking these old lows from July. You know, there's still big levels back from May, but it's another one. Let's come back to at the beginning of the year and see where we are. So I think it's caused quite a few ructions, quite a few ripples have gone out, I think, from that US interest rate decision last week. So let's see where we are in Jan when we come back. What else should we look at to wrap up the FX? Maybe euro sterling. I mean, euro sterling clearly pretty much untouched by all of that. The story on euro sterling is still the same. You know, it's been a bit of a dull week, euro sterling. But just to recap, I think I might have put this on Twitter as well over the last week. The Brexit move, the EU referendum move, market moves higher, sells off a bit, faffs about at 82.50, moves higher again, comes back a bit, 83.40, up to 91, comes back. This whole 82, let's say 82 to 83.50 area is a big one, you know. And I think while euro sterling is above here, it looks like, you know, I'd still be inclined to be a buyer. Like I probably said a week ago, there's no rush to be buying just yet because you could argue that trend is still down. But for me, this is a really pivotal area for euro sterling. So if it's going to springboard its way back up to 90, then I think this is the place. So I'd still be biased towards the euro over the pound from up here. And one last one, dollar yen. This is if you look back and think, oh, what did I really miss this year? I think in terms of expecting something to happen, I didn't miss that, but actually trading it, I missed that. Didn't trade it at all. We were looking at this all the way through the summer on the webinars because you know, we'd had a big decline in dollar yen. Let's plonk a trend line somewhere. Yeah, something like that. There we go. So the trend was still down. I remember talking about this June and July that it would get knocked down, but the whole 98 to 100 level really underpinned dollar yen. And then the trend did reverse, and it's gone absolutely vertical. You know, in the last month or so, 6 weeks or so, we've gone from 104 to 117, 118. It's a heck of a move. So I think if you want to trade it, I think on the moment, if you want to jump into that trend, for me, I want to look at the hourlies. I want to look at the hourly chart. So if we there we go. So you'd argue on the hourlies that the trend is clearly still up. So for me, as ever, if I'm going to be a buyer, I'm not drawing that trend line very well. Where's my stop going to go? And probably the tightest I want to stop on dollar yen at the moment would be below these old lows at 114.70, that sort of area, to the lows from December the 9th. So, you know, for me, I would not want to be short dollar yen because the trend is clearly up. It has had a heck of a move in the last 6 weeks, but I'd want to be a buyer on weakness. Someone's just asked, it's a fair question, your trends are based on daily charts. On average, how long do your trades last? 2 days or 10 days? Good question. First of all, I do the trends on daily charts for the purposes of this webinar. Because we only do it every week, so we come to it every week. So I think it's important to know where we are in the big picture. If I was doing a webinar every day, I wouldn't be looking at daily charts every day. But that's a fair point. So we do it on the daily charts for the purposes of the webinar. My trades if I talk about directional stuff on FX and indices, in recent weeks they've not lasted more than about 3 days. So I'll start off. I think very textbook way is how I try and do it. I'll start off looking at a daily, just to see what, okay, where are we in the great scheme of things, like pound against the dollar. If I'm looking at pound against the dollar, I'd look at the daily chart just to know where we are and think, okay, it's been going down for a week, but there's big support down here. Do I really want to be going short? So that would put me off going short. Then I think but most of my focus would be on the hourly chart, thinking, okay, where's the level? And a big thing for me, I think, as I've mentioned before, is a market breaking the previous day's high or low. So yesterday we saw pound against the dollar move to fresh lows. So even though it's bounced today, I'm not inclined to be a buyer unless and until it can, which I suppose it almost is. It almost is breaking above the previous day's high. So for me, hourlies and maybe 10 minutes for timing, but hourlies is the big one because I'm only expecting the trade to last 2 to 3 days. And the sort of moves I'm trying to catch are maybe these sort of moves, yeah. And hopefully when things go well, pow, those sort of moves. Yeah, but I always look at the dailies just so I know where we are in the great scheme of things. Okay, let's look at stock market. So just to recap on FX, I think the euro is the interesting one if we're talking about the future of the dollar after last week. You know, because we did have that surprise move, or that surprise expectation that we're going to see 3 rate rises next year. So I think this is the one we'll have to focus on beginning of next year. Is this a false break, or is this actually the start of a bigger move down? So we'll come back to this, but FX has been the interesting market over the last week. I'm going to whiz through stock markets because they have been, I think, a little bit boring. You know, last week I think was joking about Dow 20,000. You know, and we still haven't had it. You know, we still. What's this? Is this a daily chart? You can see just how tight the range has been over the last week. You know, a week ago we were, I don't know, maybe 80 points away from where we are now, and we still haven't quite hit Dow 20,000. But you know, clearly it's a market where the trend is still up, blah, 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 blah. Would not want to be short for too long. If you're short-term trading it, I think like I was saying a week ago, previous highs and lows are always important levels. Here's a perfect example. Actually, I don't think it's previous highs and lows. But December the 19th, which is 2 days ago, I'm a massive fan of support and resistance because it helps me manage risk. Helps me say, well, where do I get out if it's wrong? So right on the open, the Dow, December the 19th, so what day was that? Monday. Traded as low as 19,849, and then 2.5 hours later, comes back down at 19,854 within 5 points, and then 3 hours later comes down 19,858. So the low that was set at 2:30, which is the UK Open, the UK time for the US Open, was tested twice during that session, and both times we saw sort of 50, 60 point rallies off it. Yeah, so for me, in a market like this, it's a bit quiet. And again, actually, yesterday, was that yesterday? Yesterday again, there you go. 2:30, there's the open, the move off the open, market rallies 50, 60 points, which is quite a small move for the Dow, but it does show the lack of volatility we've got at the moment. Comes back down to it again, 10 to 5 UK time, and then holds. And then again a bit later on in the evening. So for me, if I was trading the Dow, the move this afternoon I'd be watching for, if the market comes back down to these lows from yesterday, I'd be looking to be a buyer. But even if the market goes crashing through, looking for levels back there, the point is the bias in the US markets is still up. I would still be looking to be a buyer. It's just gone a bit quiet, which is not surprising considering the time of year that it is. S&P 500 is going to be the same. There's the S&P 500, the broader US stock market index. Let's have a look at the 10 minutes on there. I think there were some levels yesterday. There you go. Same sort of setup again yesterday. Yeah, it doesn't happen all the time, but it's pretty noticeable when it does. And if you've attended these webinars for a while, you know how important I think the previous days, high and low, are. Makes the low on the open, comes back down to it, apostate, and then rallies into the close. But like the Dow, pretty boring at the moment. FTSE 100, same sort of thing. I'm guessing it's going to be just, we're up above 7,000, but pretty dull. There we go. You know, the market was capped up at 71.50, 7100 to 71.50 back in October, November. You know, so there's maybe a bit higher to squeeze, but I'd be a bit reluctant about getting madly bullish up here. But that trend again, undeniably still up. And the German 30, I have traded this a bit more than usual over the last couple of weeks. And it's a really volatile market, I think, personally for me, compared to other stock markets you might trade. But I think it's an interesting one, and it's as long as you manage your risk, okay, there's no reason why you should be scared of it. But I think it's a good market to trade. There was that break, wasn't there, that we picked up, I think, while we were doing a webinar, whenever it was, beginning of December. And the market has continued to follow through off that break. Again, the volatility's dropped, but you can see it's pushing higher, higher, higher. So for me, for the DAX, again, we have these little setups, previous day's lows. Yeah, the market is just continuing to push higher. So for me, an obvious place for a stop would be, well, 11. We can see how well 11.330 to 11.360-ish has supported the market over the last 5 days. So if the market tailed off 80 points from here, it'd be interesting to see how it performs. But stock market trends still very much up. One last one on the Bund. I started talking about the Bund a while ago, a few weeks ago, and it really is. I think it's one of these markets. It's maybe not that popular with your average retail investor, because they look at currencies and they look at indices. But it's the German government bond, so it's massive market in terms of a real future, and a real futures market. I mean, and again, I did a trade on this earlier this week, and it's or about a week ago. It's basically the same sort of thing. If a market breaks out to new highs. Well, if it's really weak the next day, I don't care so much. I want to be a buyer. I want to try and look for the market. Where's the market going to turn around so I can get in and buy? So if the market breaks out and then sells off for one day, I don't care. I'm looking for the market to turn and then hopefully placing a stop under the low from a couple of days before. And you can see again how this is the Bund over the last couple of days. How well. So that was the low on the 20th, and then you can see. A bit later on the 20th, it comes back and retests it again. So this is only yesterday. So around at 162.85, then the market rallies about 50 points off that level. So I think it's a good technical market. If you trade things like FX or indices, I think these government bonds are a good technical market to look at. We'll wrap things up by looking at gold and oil. And I think oil is the interesting one. Gold, of course, I've finally thrown in the towel on my expectations for gold to go through the roof. But I think 2017 will be an interesting year for gold. This is a longer term view. The market ran up, of course, into 2011. I think the moves we've seen this year, oh damn, hang on, I did that wrong. Let me try and draw this properly. I think the moves we've seen this year, have signaled the end of that bit of the downtrend. So I am still medium-term bullish on gold, but I think the fact that in recent weeks it's broken 1200 has negated the trend for this year. But I think the test for gold is going to be how does it perform if and when it gets back to, I've drawn that on the wrong level, but these levels down here from a year ago. So my prognosis for gold is okay, it continues to tail off for a bit, then bang, turns around and has another look higher in 2017. Let's see what happens. But at the moment, I would be in no rush to do anything on gold because this is a daily chart. It's still eking its way lower. Okay, so I think, but I still think we'll see 1500 before we see 900s. Famous last words. So I'll keep saying that, and we'll see how that works out next year. But I am expecting some strength to come in ahead of these lows. What, $1,050 lows? Let's see what happens. And then finally, oil. I think I've said a few times how much I hate the oil price because it has some great trends, but I think in terms of trading it, I don't know. I just never seem to be able to get it right. I just seem to, I don't know, get stopped out and much more than on other markets, and then it goes the way I thought it was going to go, and blah 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 blah. The classic whinges. But we were looking at this last week because we'd had that move on the Sunday night, where it broke out through this barrier. This sort of, which contract is this? This is US crude, February. So it broken out through this level that had been a real barrier. I'm drawing this on the wrong levels. Why isn't it picking up on the highs and the lows? Horizontal high and low. Okay, on there. There we go. Broke out to that 53 level, crude oil. And if we flip it over to the hourlies, I remember a week ago saying, so all we have to do now is think, well, how much is it going to pull back before it goes higher again? And I think that's always the problem with crude oil. And you can see, where's the move? Where is the move? Have I gone in too short term here? I might have done. Let's flip it out to hourlies. But I think we've had it. That was the break on Sunday, the weird move on Sunday. Then the market sold off. This is where we were doing the webinar a week ago, here, December the 14th. And the question was, how far back is this market going to go before it turns around again? And it went off for another couple of days. You know, it went from 53.20 as low as 51.20, so it moved $2 over the next 24 hours. And the move was, again, it's a Harry hindsight trade, but it's, you know, I would not be buying it here because the market's still weak. But over the course of the next day, it broke that December the 15th high. So this was the sign that maybe things are turning around. So for me, my expectation would be for oil to go back up and go back up to 55. The only question as ever is, where have you put your stop? You know, this is a big level for oil. The lows before the break, so those lows before the break higher were a big level. So I think that's pretty, you know, $50.75. But so for me, I would be inclined to be a buyer on weakness, which means it's going to be like $10 a barrel, obviously by February. But I think the story for next year, you know, we've seen an incredibly volatile year for oil, with it hitting 26, wasn't it, beginning of this year. I do think the story for next year in oil will be a continued recovery. That's the bigger picture, and that move through 53 does suggest that maybe this is the start of the next leg higher. And I suppose if we were going to do classical chart analysis, then our objective, which I don't think is a ridiculous one at all, going to be those May highs at $63 a barrel. So there we go. Let's say that's the year-end forecast for oil, 2017. I'll write that down. So end of 2017, oil will have touched 63 a barrel. Let's see. Let's see what next year brings. But that's it, really. That's it for this year's season of webinars. Like I say, it's going to be an odd time in the next couple of weeks. It's Christmas. The market's going to be quiet. Blah blah blah. I don't think there's much reason to do much. But going into next year, there's an awful lot of interesting stuff to watch. Can these stock markets hold on to their Trump election gains? At the moment, there's no sign of weakness. They've gone quiet over the last week, but there's no sign of weakness. The immediately interesting stuff is going to be the dollar currency pairs, euro dollar, pound against dollar, Aussie dollar. Given the shock of the last week and the dollar gains, does this mean a new era for the US dollar? I'm inclined to think no, but let's see what happens. I think there'll be plenty of opportunities in Forex beginning in 2017. And gold still weak, but oil, I think continued strength. Let's see what it brings. So we're going to wrap things up there. What time is it? Oh, 2 minutes to 1. Spot on. So wrap things up. So I hope you've enjoyed these webinars this year. I've really enjoyed doing them, and they've been good for me and for my own trading, because it helps me just take a bit of a step back now and again and remind myself of the bigger picture. So it's definitely helped me with some profitable trades this year. So I look forward to continue to do it in conjunction with Aondo next year. If you get any questions, though, drop me an email. My email address is david@tradeafter.com. I also do the social trading stuff with Aondo, so I do some webinars with Aondo on social trading, and it's a bit. I'm going to beef that up next year because it's been really interesting experience this year, social trading. So I'm going to write more about that next year. But there's a bit of stuff on my website, www.tradeafter.com, and you can follow me on Twitter for charts and drivel, and I'm at Jones the Markets. But we'll wrap things up there. Thanks for coming along today. Have a good Christmas, everyone, and let's hope we all have a profitable 2017. Okay, all the best. I'll wrap things up there.